Hello traders, it's Tuesday, May 24th. We're about 3 hours into trading. Let's get started with the video. I'm sorry I haven't been able to get many videos out. I've been super busy releasing my new website, which by the way is up. Please come take a look. It has a ton of educational content. You don't have to buy anything to learn the system, why it works, how we trade it. Also, I'm going to be releasing a new mobile app in about the next 10 days. So this will be the last video that I do until I release that mobile app. I'd love to have all of you come in and take the free trial and check it out. I think you're really going to like it. So let's do a recap. Take a look at the last trade. My video came out a week ago, Wednesday, May 18th, before the open. I suggested shorting Airbnb if the stock could get below 115 and if the SPY traded below 402.50. Well, SPY made that condition almost instantly, traded below 402.50, and there's $115 on Airbnb. Look at what the stock did all day. It was down about $8 from the open. Another fantastic trade. Now, I've mentioned in the video, please go back and watch it. Everything right now has to be a day trade. It has to be a day trade. There's no point to swing trading right now. S&P up 60 points one day, down 80 the next, up 70 the next, down 50 the next. That's not a swing trading environment. It's great for day trading. Lots of huge ranges. I'm going to get into market analysis, and because I'm not going to be doing a video for a long time, I want to make sure that you have your market bearings, and I'll set the tone of what to watch for. But you can see how Airbnb continued to pull back. We'll go into the daily chart, and you can see that yes, the stock has been chopping on its way down. There was your big day from last week, and look, we're below that low again. I had another pick, SI, that was my previous pick before that, and you can see that yes, on that particular day when the recommendation came out, the stock sold off. It was a nice winner, but then boom, we had this big short covering rally. Since then, the stock has continued to drift lower. So SI was another nice pick, and I think it's going to continue to perform on the short side. So why so bearish, Pete? What's going on? Why are you so bearish? And it's critically important that we get our market bearings correct. And right now, the market is telling me that it wants to go lower. Here's the price action today. You can see the big gap down, nice stacked red candles, low of the day, and a compression. Here's the 10p indicator, bearish cross right here. Beautiful sell-off this morning. And once I saw that we were resting on the prior day's low of the day and we had a bullish 10p cycle that did not result in a rally or a bounce at all, I suspected that this was going to be a good bearish cross. So the market pulls back, and now we would like, as short sellers, not to have a long compression. We don't want to have a lot of retracement. We would like to see the market go right back to a new low of the day within about 30 minutes or so, and that did happen. However, the market bounced. Here you can see that we have a bullish 10p cross right in here. So we know we need to be careful with our short positions. Lo and behold, we get about 30, 40, 50 minutes into this compression. Now we have to suspect that we're going to get a decent bounce. Well, we get that decent bounce right in here. You can see we've got another bearish 10p cross, upward sloping trend line, breach to the downside, starting to stack some red candles. Yes, we are likely to pull back. Let's take a look at that longer term daily chart. Let's see what we've got cooking here. You can see that the downward momentum is starting to accelerate. This is what happened previously. We had a nice pullback off the high, and then we just really muddled around and chopped around. Lots of green, lots of red, back and forth. No real downward momentum. We get a tiny little bounce. Since that bounce and since taking out that horizontal support level, you can see that we're starting to make some progress. That candle right there, this is from last Friday, That was a 20% retracement off of the all-time high for the SPY. That would officially put us in bear market territory. Yes, we did bounce, but we're starting to get right back on it. I do not believe that the market is going to have a sustained bounce until the Fed is done raising interest rates and until asset managers are able to gauge the impact of those interest rate hikes. So maybe September, October, the dust starts to settle a bit. But right now, they're talking about a 50 basis point rate hike in June, 50 basis point rate hike in July. We have COVID spreading in China. Beijing, they're starting to see a lot of outbreaks. Their economy is already suffering. We've got lots of analysts are downgrading their expectations for China's growth this year. 3.7% is now kind of the average of what analysts are expecting for growth in China. Plus, the PBOC does not like what they see. They cut interest rates at a time when the rest of the world has been raising rates. So they obviously are very concerned about their growth prospects. We have lots of issues: war, droughts, inflation, higher interest rates. All of those things are weighing on the market, and analysts are waiting to see if that is going to impact earnings. And right now, we're starting to see some of those revisions. In fact, the problem du jour is in the online advertising sector. So we'll take a look at some of those stocks. Those are some really weak plays right now. And if you're thinking, my gosh, this is such an attractive area to bounce, 20% off of the high, we got to be finding support in here somewhere. These market declines go a lot deeper and farther than you would have ever expected. Market rallied a lot higher than we would have expected as well. So this pullback will be bigger than expected. I don't believe that we're going to see a decent rally until we have what's called a capitulation low. And that low is going to feel gut wrenching. Long red candle closing on its low, followed by a long red candle closing on its low, followed by a long red candle that's down early in the day, and that candle reverses bye to where it could even be an 80 or a 100 point S&P drop intraday that gets completely reversed and finishes with a bullish hammer on massive volume. Until I see that formation, and I don't think we're going to see that formation till maybe July, I don't believe that we're going to see a substantial market rally. So all this bad news has to play out. We have to see that panic wave of selling. Then we've got a chance to put in a longer term low. And from that point on, we will be able to build. We haven't seen anything even close to that right now. So all of these little dips that you get and these little rallies are nothing but a head fake. They are a tiny short covering rally, and they are largely program driven. So you get this big decline right here, then you get about a 3-day reprieve. Then you get a big decline, then you get a 3-day reprieve. Repeat, repeat, repeat. As a trader, what do you need to do? Swing trading is extremely difficult right now. Long red, long green, long red, long green, long red, long green, long red. Super hard. The downward bias is there, but super, super choppy conditions, always having to deal with these bounces. So if you get a nice bounce like this, you're getting into day 3. Now we've retraced half of that long green candle. We got a red candle forming. Okay, you can get short in here. You can try and hold overnight for a couple of nights, but as soon as you get these deep troughs like this, the sell-off, you've got to take profits because you can expect one of these. So now you get one of these. Here we go. Gap down. Okay, now we're starting to build some momentum. Now I can get short again, get this big air pocket down here. Now you've got to cover. So the idea is to take profits on those deep troughs wait for the market bounce, wait for that bounce to exhaust itself, and then you can reload on some of your short positions. But the best thing, quite honestly, is to just day trade. My gosh, it's been an incredible market to day trade. Big sell-off, nice bullish engulfing candle here, got a compression, everything's starting to line up. You get your 10P cross, and then you have a breakout through horizontal resistance. Look at that lift that you got yesterday. Beautiful. Got this opening gap higher. It holds, bullish hammer. Okay, trade that. There's so many opportunities intraday that there's really no reason to take an overnight swing position. You're simply not rewarded for taking that overnight risk. I believe this environment's going to continue the rest of the summer with a choppy downward bias, lots of storm clouds on the horizon. That's going to keep buyers at bay. They're simply going to wait until all of this plays out. So that really big capitulation low, when I see it, I'll let you know when I see it. That will be the hard low that we'll be looking for. And then we can start to think about the market forming a nice base and taking some longer term long positions. But until then, you have to favor the short side. These are some of the stocks that look good. I am not going to give you a pick of the day because I'm not going to be around for 10 days. I don't know what's going to happen between now and the time I record my next video. But here are some stocks that you might want to take a look at. All the online advertisers, Google, downward sloping trend line broken to the downside. That is a descending trend line. So yes, significant, got heavy volume. Facebook, there you can see upward sloping trend line broken to the downside. Also horizontal support breached. Looks like a nice short. Roku making a new low. Also looks like a good short. And Snapchat, big gap down. If I were going to pick a short of the day, it would be Snapchat, because when you get a big move down like that and the stock closes on its low, you're going to have follow through selling. So yes, SNAP is down a lot. Most people don't have the guts to short something at this level, but you need to realize is that there are a lot of asset managers, a lot of portfolio managers who did not like that news and who still need to get out, and you'll see the stock continue to drift lower. We've had other instances like that as well. I think Dell Computer might have had a similar setup, and I highlighted this in the chat room. It was this long red candle right here, followed by another long red candle and a breakdown. And at this point, you'd think it can't go any lower. That's a good short. You can see how the next day it put in an even lower low. So yes, you can expect follow through on stocks that make big downward gaps like that. Please check out my new website. Look for the URL in the description area of this video and take the free trial. You'll be able to check out my mobile app. I'll be releasing that officially in about 2 weeks or so. We'll see you then. Good luck with your trading. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.